This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on June the 19th, 2014. And I should mention, during the summer months, we're going to be taping the show on Thursdays. Harold has business on Fridays, and that will happen during the summer months only. We normally tape on Friday. Our time is 8:43 Mountain. Radio show runs on your favorite radio stations. Also, we have a podcast through iTunes. Type in World Financial Report on Radio. You can find us there. We're portable. We go anywhere you do on your portable device. Harold has two websites, HESradio.com or rarecoloreddiamonds.com. The shows are streaming there. He does market commentary on those two websites, and as well, you can find it on the podcast site. As we tape today's show, the Fed yesterday came out and reduced quantitative easing by $10 billion for the fifth straight meeting. Their quantitative easing is at $35 billion a month, and they think that they're going to keep interest rates reduced for quite some time. They say a considerable time. Also, from the Financial Times, this is stunning news. The Fed is considering charging investors if they want to exit bond funds during a financial crisis. So basically, they're trying to keep you in there. Also, Vladimir Putin, an aide of his, came out this week. He wants to start an anti-dollar alliance to force the United States to end the Ukraine civil war. As you can see, Putin continues his war against the United States via the U.S. dollar. Something that should concern many people, the Australian government grabbed $360 million from idle household bank accounts. Now, these bank accounts weren't 30 years old or 40 or 50 or 60. They were 3 years old. That's right, 3 years old. They have taken $360 million. Do you think governments maybe are in financial trouble? Also, the Argentine leader came out and said she won't honor a $1.3 billion judgment in debt that is owed to hedge funds in the United States. As a result, it looks very possible that the Argentine government and the country could default. But, Harold, we have the Iraqi situation, which is very tenable. The Ukraine, Argentina, gold and silver up very, very strong today. But when you hear about governments in Australia absconding with money, you hear that the Federal Reserve looking at having charges to exit bond funds during financial crises. You know, we had the bail-in, and now they're already planning for the next crisis. It's now a time for hard assets.
You bet, Randy. Again, as all these things start to unfold, you know, we start to think about for the last couple 3 years, all the things that have been happening that we've questioned in the economy, and the things that the government were doing, which they were doing out of desperation, and now we're starting to see the results of it. You know, the experts are saying that when these situations start to unfold, it's going to wreak havoc on the financial markets. So those that are sitting in the stock markets and in paper assets and think that everything is okay, they're not okay. You're going to see situations happening because the banks never got healthy. After 2008, with all the money that the banks lost, there's no way in the world they got healthy again. And with interest rates at 2% or lower, they're not making any money. And they're not loaning out any money, so, you know, you've got a stagnant situation. Now, what we're going to find, aside from what Randy just said, you know, which there could be a penalty, you know, for exiting bond funds and things like that, we feel the next major potential problem is going to be with the banks, where they are literally going to charge us to keep our money sitting in the bank, which isn't safe anyway. So this is a result of all the things that have been happening since 2008, when the government's injected $20 trillion back into the marketplace, and it didn't work. It didn't have the desired effects. They felt that by adding all this money back to into the marketplace, in the bonds, into the mortgage-backed security markets, and into the stock markets, their feeling is it would stimulate the economy. People would get back to work because corporations would be doing better and hiring more people, and we get back on track. And in theory, it made an awful lot of sense, and it definitely could have worked, except you cannot build a home based on a weak foundation. It's always going to crumble, and that's exactly, unfortunately, what's happening now. The foundation that they built this on was extremely weak, and now it's starting to crumble. And all the banks and all the money that's been loaned out and all the money that's been printed has now all gone into the system and is basically lost. And nothing has really been accomplished. The employment situation in the United States has really not gotten better. In fact, it's gotten worse. On top of that, you've got an economy which is stagnant in the United States because the middle class has no money anymore. And any economy, is the middle class that drives the economy. They're the workers, they're the spenders, they're the ones that have the kids and go out and are spending all the money at Walmart and Sam's Club and Kmart and all those type of places. And retail sales are down because the middle class is getting hammered. They had good jobs before. Now those jobs are paying a fraction of what they used to, and the fact is that the middle class is disappearing. That's why what we're saying about the U.S. economy and other economies, and this is the same scenario for Europe's economy, they've got just as bad, if not worse, a scenario there. So all of this has to come to a head eventually, and when it does, the markets are going to react. Now, we know that back in 2011, gold hit $1,920 and silver hit $50. We're in a major bull market. We are on top of that bull market every single day. We are predicting where the markets were going. We were very accurate with our calls, and because the market was trading on its own volition. I've been in the investment business 35 years. I know how to read a chart, and I know how to predict a market. And basically, in 2011, when everything changed, it was nothing to do with the marketplace. It was because the exchanges had sold way too much gold and silver, and there wasn't enough physical gold and silver to back it up. That's why they plummeted the market. That's why they chased everybody out of the gold and silver market. And it's a despicable thing to do, but that's exactly what has happened. And in actual fact, it happened in 1980. They just did it in a different way. When they sold more gold and silver than was available in the warehouses, they closed the market for 2 days, and when they reopened it, silver dropped $26 in just a couple days after that. So we now have a scenario where things are starting to unravel. The economy has not gotten better. The desired effects have not taken place. Now you've got the situation in Iraq getting dire. We're trading at 106 and change in the oil market right now. Oil is got potential to go to 140 to 150, and we do predict that that market is going to get to that level. And a lot of it is going to have to do with what's happening in Iraq. Now, there was rumors all throughout this week that the insurgents, that the terrorists, were successful in taking over the biggest oil fields in Iraq. Now that's been second-guessed and doubted. So we haven't got the exact explanation of what has happened there, but the fact that there was an attack on Iraq's largest oil field is extremely concerning. And if they didn't or weren't successful this time, you better believe they're going to be successful the next time. So, again, this is what's happening in the market. All of these situations are going to affect gold and silver, diamonds, hard assets, those type of investments. That's where we recommend you put part of your money, safe money. This is money that you're not going to lose. This is money that you need to put away for preservation of capital and to make money. And there's very few investments out there anymore that you can make money. Real estate isn't strong anymore. It's a gamble. The stock market's the biggest gamble, and it's manipulated. The fact is that the commodity markets are very, very strong right now. Look at what's happening in the food markets. They're up 25% in the first quarter. On top of that, the U.S. dollar will weaken again. There's no doubt about that. There's a potential war against the U.S. dollar, using China and Russia, which again, in 2011, when gold hit 1900, the U.S. dollar was 72.5 cents, almost 8 cents lower than where it is right now. So things are starting to shape up. As we're taping the show, gold is up 1740. We're trading at 1296.80. 1300 would be a very nice point to get above and have two closes above. The silver market is up right now 41 cents. We've broken back above the $20 level, and we're at 2041. The platinum market has been on fire. It's up $16. It's at $1,466, and palladium is up another $8 and is traded at $836. again, even though we don't buy what's happening in the stock market, the Dow in particular, again, how does the stock market hit record levels when the economy is in such bad shape? So, again, it's trading down today, but it's right around 16,900. You've got the Toronto Stock Exchange down 25 points at 15,083. U.S. dollars down 20 points at 80.19. I do predict that the U.S. dollar will fall further, and the oil market has gone positive, up 2 cents on the day at 105.99. Ladies and gentlemen, there's things unfolding around the world that are so severe that what does the small investor do? If you go with the big boys, if you trade stocks and all that, and you think that you know those markets, good luck to you. But we saw 1999, we saw 2008 when the Dow dropped from 14,000 to 6,500. If you're in your 50s, 60s, or 70s, and that happens again, you'll never, ever make your money back. Put some money into gold and silver. It's a hedge against all these terrible things that are happening. It's been proven in history, and it will definitely come through again. Not the bull market that we had for the last 12 or 13 years, aside from the last 3 years that it's done nothing, but we're going to see a major increase in the price of gold and silver. I'm still predicting that silver prices, as severe as things are, could get into the thousands and thousands of dollars of the gold market, and silver well into the $100 level. So they're at bargain prices now. I would buy physical silver. Make sure you own it outright. Don't leverage anything heavily, unless you've got a propensity to gamble. I like owning physical gold and silver as a hedge against currency devaluation and about what's going to happen in the inflationary markets. It's one of the best investments you could make, and the prices are way lower than where they were 3 years ago.
Harold, speaking of inflation, in our newsletter, and going forward, you can receive our free weekly newsletter, the companion to our radio show, from Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. You can get our free weekly newsletter. It is a full newsletter, and we have our chart of the week. And this week we have price index for meats, poultry, fish, and eggs skyrocket to all-time high. Also, two other stories. Price of bacon reaches all-time high, and beef reaches U.S. record as rancher sees more gains. I think the Fed has to be very concerned about the inflation that's coming down the track, because you start to see what's happening in the food. If you get your own groceries, I do, you see the price increases at the till. If you go to restaurants, I was recently at a restaurant, something that normally was costing me under $10. Suddenly, it's over $10. They've actually raised their prices twice in the last 6 months. So you can see food inflation is coming down the track. And that's why we advocate having hard assets: gold, silver, platinum, palladium, diamonds. To invest in precious metals, speak with Worldwide Precious Metals. Their website, wwpmc.com. wwpmc.com. Their telephone number, 1-866-623-2002. 1-866-623-2002. Their website, wwpmc.com. In our free weekly newsletter, Richard Russell, a quote from him, he says, "I would much rather be long silver than long the S&P at this time. Stacking physical silver makes a great deal of sense." Also, the Aden sisters, very well known as chartists, and they're into technical analysis. They are very well known from the past calls they've made that have been very accurate about the financial markets. They say silver is super cheap. It's also cheap compared to most of the other markets. Demand for silver is also very good. A recent report said that physical demand rose to a record last year. This growing demand ties in well with the technical situation in silver. It's too bombed out, and like gold, it's likely headed higher in the coming months. One other story that we had: historic breakout will launch the price of silver to $65. Silver has just experienced a historic breakout. If you look at the 7-year chart, and we can send this to you, it shows a trend line which traces back to a $50 high on silver in 2011. to this historic breakout. This may usher in the long-awaited bullish move, which will take silver to new all-time highs. It's important to keep in mind that this historic breakout in silver is coming from the most oversold levels ever. So this has the potential to be an extremely explosive situation. The last time silver rallied from such oversold levels, it soared 320% in just 8 months. A similar move would take the price of silver to an all-new high of $65 an ounce. And Harold, we encourage people to get the free weekly newsletter from you. Connect with you at rarecoloreddiamonds.com, 1-800-432-1022. And to invest in precious metals, speak with Worldwide Precious Metals, www.pmc.com, 1-866-623-2002. I know, Harold, you go out with your wife, Harriet, and know Harriet does the shopping. I'm sure she's seeing that meats, poultry, fish, eggs, bacon, beef, everything is going up in price as I do. And it's one of those things where they say to us there's no inflation, and the average everyday person just needs to stand up and say, no, stop lying to us.
Well, you're right, Randy, and then take into consideration the weakness in the Canadian and American dollars compared to anything coming in from Europe. So, when you talk about inflation, it's not only the product inflation, which is skyrocketing to, as the report showed, all-time highs, record highs, but on top of that, anything that's being imported, you're buying less of because of the weakness of the Canadian and American dollars. So the currency market has a tremendous amount to do with almost everything that we purchase, including investments. Don't forget, most markets are traded in U.S. dollars at this particular point. Now, that could change. That by taking on Putin and the disrespect that the country seems to have, the world seems to have, unfortunately, for President Obama, you could see a war break out between Putin and Obama in the sense of them trying to hurt each other, flex their muscles. I put my money, unfortunately, on Putin because the guy's got all the money in the world and got all the resources at his back. And basically, if he's going to attack the U.S. because of sanctions that the U.S. are bringing against Russia, then he's going to hurt the United States. And the best way for him to do that is with the currency market. So it's going to be interesting to see what happens. But you've got a major situation in Iraq. You've got a real battle going on, not only between Russia and the Ukraine, but Russia and the United States. And I also understand that things are not that great in China. So as far as listeners to our radio show for the last 15 or 16 years, we've continued to do these radio shows even though the markets have gone against us. We're still firm believers that we are 100% correct in what's going to happen longer term. We don't control the markets in any way, but again, we're not foolish either. We put our money up the same way as you have. I still have put all the gold and silver that I bought over the years, I still own physically. I would never, ever suggest something to somebody else if I haven't already done it myself, and I don't have any problem sleeping at night knowing the investments that I have. Gold, silver, and diamonds will not only get us through these difficult times, but we'll end up on the top of the heap because we're going to make a ton of money in those markets.
And you want to get some money out of the banking system. When you hear something like happened in Australia where they grabbed $360 million out of household bank accounts, and this is, dormant accounts that are just 3 years old. It's absolutely absurd. To invest in precious metals, speak with Worldwide Precious Metals. www.pmc.com is their website. The telephone number 1-866-623-2002, 1-866-623-2002. In our newsletter this week, Gerald Salente, who is an economist, said, the world must act to contain the risk of another devastating housing crash. This is why when interest rates go up, the Ponzi scheme will come unwound. That's why I believe in gold. Of course, gold is beginning to show some life once again because of Iraq, the surging price of oil, and the bad news on the economic front. The bottom line is they are desperate to juice the economy no matter what, but they are running out of options. This is why a major disaster lies in front of us. And we have an article in our newsletter under the real estate section where Salente says this is the key bubble that will collapse the house of cards, and he's talking about the housing market. Mike Maloney is a very well-known advocate for investing, saying that we should invest in gold and silver. And he spoke recently about not only the Chinese housing market, but the Canadian real estate market as well. And we have that in our newsletter. Click the link. You'll see the video. It is absolutely shocking as to what potentially could happen here in Canada. Bill Fleckenstein, he's very concerned about the stock market. He says the stock market still believes the Fed is going to be able to taper to somewhere near zero and not have an accident. The stock market is wrong. There will be an accident. A tapering is a reduction in the amount of easing, but people need to keep in mind that the Fed is still easing. In any case, the Fed is totally misreading the economy because it's not as strong as they think, and housing is starting to roll over. There are other signs of weakness, so the Fed is in for a rude awakening about economic strength, and they're going to be in for a rude awakening about the amount of inflation they're going to be able to engender, because it's going to be a lot more than they want. Today's announcement was exactly as expected, and I doubt Janet Yellen is going to say anything of consequence in her press conference. The stock market is continuing a game of chicken, and the metals are trying to decide if they want to go to the upside or not. And at this point, Harold, the metals are moving to the upside on a day like today because of what's happening in the markets financially and geopolitically. And we have 2 minutes left in our segment here.
You bet, Rand. When these markets do run, they're going to run in a totally different fashion. You're going to see days in gold where it's going to go up $100, $200. I've been involved in the metals when they've done those type of scenarios. Silver went up $30 in 1980 in 3 months. So basically, we expect to see a similar type of market. As we're talking today, gold's already up over $21. We hit $1,300 in gold today. Earlier in the week, or at the end of last week, we were down at almost $1,250. So we've had a nice week in gold. Silver is up 41 cents, and we're over $20. So again, it wouldn't take much for these metals to go up strong, especially with the negative sentiment that's been involved in the metals for the last 3 years. So when you have all these people not really paying attention, and all of a sudden the economic situations point towards gold going up, you've got all these new buyers coming into the market, and basically you're catching everybody going the wrong way. It's a perfect scenario for skyrocketing gold and silver prices, and that's what I predict is going to happen. When it's going to happen, it could happen the end of this year, it could happen into next year, but it is going to happen. There is no doubt in my mind.
To invest in precious metals, speak with Worldwide Precious Metals, wwpmc.com. Their telephone number, 1-866-623-2002, 1-866-623-2002. Their website, wwpmc.com. If you'd like to receive our free weekly newsletter, going forward, Harold will be sending it out. And if you'd like to receive it, connect with him at rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. We're going to come back and talk about diamonds. Interesting week in the world of diamonds. There is a big blue diamond that was found, and we'll tell you about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 19th, 2014. And I should mention, throughout the summer, Harold is doing business on Fridays. We're going to be taping the show on Thursday mornings. To invest in precious metals, speak with Worldwide Precious Metals. Their website, wwpmc.com. The telephone number, 1-866-623-2002. Harold's website is rarecoloreddiamonds.com. You can speak with him personally and privately at 1-800-432-1022. And he has an auction site, too, hsfineauctions.com. Next auction coming up this fall. And I should remind you that I would really encourage you to go to hsfineauctions.com, take a look around, take a look at the past catalogs that we've had over the last year and a half, and see what the website is all about. The auction world is very exciting, and Harold recently raised $70,000 for the Susan G. Komen Breast Cancer Foundation. We'll talk more about that. And it's been a very good week for diamonds. Our featured diamond of the week, at rarecolorediamonds.com. You can find it there, and it's videoed. A .33 carat radiant cut, fancy, intense pink argyle. Absolutely stunning. And we had another few items we wanted to touch on. Why now is the time to own diamonds? A video that we found from Bloomberg. You can watch that. And a rare blue diamond could fetch $35 million. A rare 1.22.52 carat blue diamond found in South Africa could fetch more than $35 million, according to Petra. Only 3 or 4 blue diamonds over 100 carats have ever been discovered. So they obviously have the challenge ahead of them of trying to polish it and cut it. And Harold, the time that goes into that, and that's why these are works of art. You know, you're sitting back, you see a painter, a Van Gogh, you see them sit back and spend hours, days, weeks, months on a painting. And when it comes to diamonds, it's very similar. They have to figure out how to cut it. They have to figure out how to polish it. They have to figure out a way to bring out the essence and the sparkle in the diamond and bring everything out in it they possibly can. It's nature's art. It's a work of art, and it's exciting to hear about that diamond coming out. And somewhere down the line, they will sell it at auction, and it will be exciting to see exactly, Harold, what it does go for.
It's an unbelievable situation, and it's an unbelievable risk. Just imagine this. You're going to pay maybe $35-40 million for a rough diamond. Then you've got to have the cutter that is successful enough to cut a diamond like this, because that's where the major risk is. So basically, they're going to look at this diamond, they're going to map it out, they're going to sit down with gemologists and everything and figure out the best way to cut this diamond. Now, 122 carat rough diamond, who knows what it's going to cut down to? It could cut down to a 30 carat diamond, a 25 carat diamond, a 40 carat diamond, and in that case, depending on the color, if it turned out to be vivid or intense blue, it would be probably the highest price ever for a diamond in history. But you have a huge risk, and that type of diamond could take years to cut. So again, you're talking about something that you're going to pay probably $35 million for as a rough diamond, and then you're going to go out and have that cut. And again, all the risk is in cutting that diamond. So it's going to be spectacular. I can't wait to see what the end result is. But the diamond business is so strong right now because of everything that we talked about in the first half of the show. How bad the world economies are getting, how currency wars are going to break out between Russia, China, and the United States and Europe, and we're going to see situations that are going to be devastating. If all of your assets are in one area and in one currency, you're leaving yourself susceptible to losing a major part of your wealth. Don't forget, in Europe, when they were having the debacle with the euro, if the euro was no longer there and Italy had to go back to the lira, they would lose 60% of the value of their currency. So that means that if you were worth $1 million, just to make things in simplistic terms, and you went from the euro back into the lira, you'd be worth about $350,000 instead of the $1 million that you were worth before. That's how the currency markets are going to affect you. So why are diamonds such an important investment? Because diamonds right now are priced in U.S. dollars. However, they could be sold in British pounds or euros or any other currency. So they're the only asset that I know of that can do this. Because if you trade, commodities, you're trading them in gold in U.S. dollars. If you're trading oil, you're trading in U.S. dollars. If you're trading stocks, you're trading in U.S. dollars. So basically, you want to own assets that are not only controlled or affected by one currency, and that's the diamond market. On top of that, we talk about how difficult it is to make money today. How about just keeping your investments? The report that Randy told us about, which was what's happening in Australia, where they're going to steal about $350 million. Was it million or billion?
It was million, yes.
Million. They're going to steal that out of people's bank accounts. Just think about that. Soon you're going to be paying money to the banks to keep your money in the bank, and your money isn't safe in the bank. So the fact is, if you did keep your money in the bank, you're going to get less than 2% on your money, and then when you factor in inflation and taxes, you've actually lost money. And if the bank is actually going to charge you, then you're even in worse situation. So why would you put yourself in a situation like that? There are alternative investments, and this is the reason that I've been on Bloomberg 4 or 5 times recently, is because of alternative investments. Investments that are not stock and bond related, that are not paper assets that deteriorate, when the economy deteriorates. What we're talking about is an asset that will never go down in value because they're so rare, there's so few of them, and they actually increase in value for the same reason. They're so rare and there's so few of them. On top of that, they respond to inflation as well, if not better, than any other commodity because they don't trade on exchanges. They trade privately through auctions and private sales, and that's what we do. We own H. Siegel Fine Auctions, which is the secondary market that resells diamonds. So we do it all for our clients. We recommend the diamonds to you. We deliver the diamonds directly to you. You own them outright. We'll even put them into magnificent pieces of jewelry for you, and then enjoy them for 10, 15, 20 years, and then give it back to us to sell them. We get 10% of the profit, you get all the rest. So again, this is one of the best times in the world to be involved in the diamond market. Number one, all you have to do is read the newspapers each week, or better still, get our newsletter. It's loaded with information on rare diamonds. On top of that, the auctions that are happening around the world are all setting records. There's a reason for that. People with money that are smart want assets that the government doesn't know about, that are portable private wealth, that are wealth in any country. And there's no other investment in the world like the diamond market. And that's exactly what we do. I've been in business 35 years in the investment business. However, the diamond market is where I have the majority of my assets. I have more money in diamonds than anything else. I have a large amount in gold and silver. I have nothing in stocks, nothing in bonds, and nothing in retirement savings plans. Don't trust them. Don't believe in them. They never work out. But when it comes to the diamond market, because I'm comfortable with it and familiar with it, it's a market that on every one of our auctions, every diamond that was sold at a profit. Can you say that in any other market? There's also another report in the newsletter that talks, or it's not in the newsletter, but it just came out too late for the newsletter, but it says that diamonds attract funds as largest gem prices surged 76% in a year. Now, that was a little bit of an older article, but that was what's happening in diamonds. They're skyrocketing in price. Blue diamonds, pink diamonds are probably the best investment diamonds to buy at this time because the mine that produces them, the Argyle mine in Western Australia, is going to close in 2020, which is only 6 years from now. In 6 years, if you own a pink Argyle diamond, you could see 5, 8, 10 times your money back just on that investment diamond alone. And because there's so few of them, they never decline in value. In fact, there's only about 200 carats a year, and that represents 95% of the marketplace. When that mine closes in 6 years from now, you will never see pink diamonds hardly ever again because that mine produced 95% of them. They're smaller diamonds. They're the most concentrated form of wealth in the world, but they go up tremendously in value, 15, 20, 25% a year, depending on the color. But the closer we get to the mine closing, these diamonds can go up 1,000%. And that's what I'm predicting that they will. I also love yellow flawless diamonds. They have to be the internally flawless ones. They go up by 15% a year, never decline in value. A diamond you can buy today for $20,000 in 10 years from now will be worth about $75,000. What a great investment. I put those away for my kids and grandkids because I would never put $20,000 or more into stocks, but I would definitely put it into a diamond for them. They're not going to lose money, and in 10 years we know what they're going to be worth, basically. In a stock, you have no idea. So yellow flawless diamonds, Argyle pinks, deep flawless whites, they do tremendously well. They went up over 16% last year alone. You tell me any other investment that went up 16% that wasn't risky as risky could be. And these could be sold in other currencies. So do yourself a smart favor. these markets are getting crazy. The food markets are skyrocketing in price. Inflation is here. Gas prices are going to skyrocket because of what's happening in Iraq, and there isn't as much oil around as most people are saying. Believe me, I've traded oil for 35 years. I know that market very well. We called it from $18 to $150. So get some money into some hard assets. Physical gold, where you own it yourself, physical diamonds, physical silver. Those are the areas that are going to get you not only to where you need to go, but can make you rich. And I am predicting that when nobody is even thinking about these markets, that's when they're going to skyrocket. And all we care about is that the listeners to our radio show, our clients, do well in a very, very tough marketplace.
Featured Diamond of the Week from rarecoloreddiamonds.com. You can go to the website right now, click on Featured Diamond, see the video for it in our newsletter. You can see it as well. We have a picture of it. It is a .33 carat radiant cut, fancy intense pink argyle. And this is something that you could build a portfolio around. There is no doubt about that. We also have a great video, Why Now is the Time to Own Diamonds. Harold has been on Bloomberg twice on TV. We have both of those appearances. He's been on Bloomberg Radio twice. We have his most recent appearance on Bloomberg Radio. You can listen to that and see Harold on the video as well. We can send that to you. Plus, a rare blue diamond was found, could fetch more than $35 million. We can send that story out to you. If you'd like to receive our free weekly newsletter, speak with Harold, rarecoloreddiamonds.com. The telephone number 1-800-432-1022. One question, and I haven't asked you this before the radio show, and when you and I speak during the week briefly, I never asked you this question, but it's something I've been thinking about for quite some time. And if you're starting a diamond portfolio, Harold, would you start with a pink diamond first and build from there? That would be your core holding, knowing that the Argyle mine is going to be shutting down in 2020. Would you start with a pink first, or would you look at a yellow?
Well, that's an excellent question. It depends on your financial situation, because you can get involved in yellow flawless diamonds for as little as $15,000 to $20,000. But in Argyle pink, they're going to start in the $40,000 to $50,000 range. So it depends on your financial wherewithal. The biggest money, the biggest return will be in, over the shorter term, will be in Argyle pinks, because, again, the mine is going to close soon. As we get closer to the mine closing, the prices are really going to pick up, and people are going to buy, last second like they always do. And they'll be paying much, much higher prices than if they bought now, when the prices are substantially lower than where they will be when the mine is about to close. But yellow flawless diamonds are also forever. There's only about 100 that are cut a year for the entire world, and basically most of those are put into jewelry. So there's very few that are left for investment purposes. That's why, again, a 15% return on your money per year is very, very enticing. And again, because there's only about 20 or 30 that make it to the marketplace investment-wise, you're talking about a market that is very, very tight, and over time will go up tremendously in value also. So, again, I got to say, Randy, an excellent question, but a lot of it, because of the price, depends on how much you have to invest.
So if you do have that money, obviously you want to build around an Argyle pink. Maybe if at this point in time you don't have as much to invest, then you're in a situation where you look at a yellow, build from there, and obviously over time, as you develop your portfolio and have more money, you can start to take a look at some of the other diamonds. Obviously, there are green diamonds, blue diamonds, very, very rare, red diamonds, even more rare. And green diamonds, that's something we don't talk a lot about, Harold, but I know that you have connections to get green diamonds, too.
Green diamonds are ridiculously rare and will continue to be. You need uranium, basically, in the ground in order for a diamond to turn green. So nitrogen for a diamond to turn yellow or orange, and boron for a diamond to turn blue. A lot of people have been asking about these synthetic diamonds, these diamonds that are made in laboratories, because they're perfect. And they say, won't that affect the investment diamond business? And the answer is absolutely not one single bit, because the fact is that you only buy a diamond that has a GIA certification. And GIA will only certify diamonds from from cutters that they know. So if a layman off the street bought a diamond from a laboratory, bought a 5-carat vivid blue flawless diamond, understand that diamond would normally be worth about 12 to 15 million. So if you think that you can con or fool the GIA, and you walk into GIA and say, listen, I've got this blue diamond, would you grade it? They'll never grade it for you. If they don't know where that diamond came from, what mine, who cut it, and everything about it, they won't even touch it. Same with green diamonds. Green diamonds, you've got to bring the diamond to GIA while it's still a rough diamond for them to examine it. Otherwise, the diamond comes back as undeterminable, and it's worthless. So basically, GIA is not stupid. GIA knows that there's synthetic diamonds out there, and they only grade diamonds from entities that they've done business with over the years and who they know. Otherwise, it'll never get graded. So, again, I don't anticipate in any way, shape, or form that diamonds that come out of these labs will have any effect on our business whatsoever. In fact, as the world continues to go into financial chaos, you're going to find that the diamond market is the best place to have your money.
And the truth is, cubic zirconia has been around for a long time, and that never replaced white diamonds. So a very good analogy, Harold. Featured diamond of the week. It is a .33 carat radiant cut, fancy intense pink argyle. And if you were starting a portfolio and had the money, this is one that you could build a portfolio around before moving into a yellow, maybe looking at a green or a blue or a red, or just even adding to the portfolio with other more colors in the pink or yellow line. But now's the time to look at starting your own diamond portfolio. And it was in August of 2005, and here we are almost 9 years ago. Naturally Fancy Colored Diamonds, the Best-Kept Secret. It was an article that was written by Harold Siegel. And back at that time, Harold was talking about diamonds, colored diamonds. Most people had never heard of them as an investment idea. Harold was obviously educating our listeners through the radio show and through our newsletters about investing in diamonds, and they have turned out to be a massive success. Now, the website, he started rarecoloreddiamonds.com. A lot of people didn't think that would be a success. It's been a huge, massive success. It's like going to a museum online and seeing some of the world's greatest rare diamonds. And then Harold took it to even a higher level with hsfineauctions.com, and we started the online auctions, and most recently did an auction for the Susan G. Komen Breast Cancer Foundation, raising $70,000. They were ecstatic with that amount of money. But Harold, it just keeps getting better and better and better all the time. And I know that you're always thinking of ways to improve, always thinking of ways to give more value to your clients and those investing in hard assets like diamonds.
Well, thank you very much, Randy. I really appreciate that. You know, the thing is that if you remain stagnant in business, then you're going to be overtaken. And basically, you know, the diamond business has always been one way. Diamonds come out of the mine as a rough diamond. They get cut and polished and sold to the jewelry trade. What I brought to the business is the investment aspect of it. And there is an investment aspect, a huge one. There was just a diamond that was sold in 1991 for $2.5 million, a blue, and it just recently sold for $17.5 million. So how could diamonds not be a great investment? It's right there in front of us. All we had to do was create the way to resell them, and that's the biggest thing that we brought to the business was the secondary market, H. Siegel Fine Auctions. So that's the most pride that I have in the business. It's what I really believe is going to revolutionize the business. That's why we've been on Bloomberg 4 times and attracting, you know, business from major charities. So again, we don't just sit back and let business come to us. We're always thinking of ways to improve the business with the major insight is that we want our clients to do well, and that's why we only work on a basis of profit. If you profit, we get 10% of the profit. If you don't profit, we don't get anything. So that's the way I've always run my businesses.
You look at diamonds as a long-term asset, something that is real estate in your pocket. It's nature's art. It's similar to art and cars and other things. The only thing is that obviously art can deteriorate, cars can crash, but diamonds, they are forever. And if you take a look at the long-term average, they average about 10 to 15% a year. And obviously, other times they can go up more dramatically, as Harold was mentioning, 76% during 2008, during the financial crisis. It's a concentrated wealth storehouse of value. It's better than cash. It's tangible. It's reusable. And if you look at the 5 compelling reasons to own and invest in diamonds: privacy, portability, estate planning, price stability, long-term growth. And as we've talked about many times, when you have a diamond, yes, it is an investment. But when you're wearing a diamond, depending on where you want to wear it, you have something that no one else does. When you walk in the room, you have a rare colored diamond. And Harold, you have seen so many times with your wife, you've been with her, she's wearing some of the rarest and some of the most incredible diamonds on the planet. You'll walk in a room and people are immediately drawn to her and want to talk to her and see the diamonds.
Well, diamonds do that. The fact is that the crown jewels and the jewels that have been in the Smithsonian, the Hope Diamond and all that, people are gravitated to it because they're, as you said before, they're nature's art. They're magnificent. We have collections. We have Elizabeth Taylor's last 8 pieces that have never been auctioned. So when my wife walks into her room, and she's a strikingly beautiful woman, and she's wearing Elizabeth Taylor's necklace and earrings, obviously there's a lot of attention there. People are taking pictures and sending them to their friends. It's the time of social media. Let's face it. Everything has changed that, you wear something or you do something and then everybody in the world knows about it 5 minutes later. So, again, I couldn't be happier to be in this business, Randy, because, again, it's an investment, but it's an investment that its time has come, and it's a safe investment. It's just longer term. You don't buy a diamond and sell it in 2 or 3 years. You're not going to make any money. You're wasting your time and I don't suggest it. If you're going to buy a diamond, buy it to hold it for 10, 20, 30 years. That's where the biggest amount of money is going to be made. I bought a diamond back in 2003 for $350,000. Very rare, vivid pink argyle over 2 carats. It's now worth over $4 million. That's what you want to do. And a lot of my clients that are older, retired, they buy diamonds and leave them to the kids and grandkids because it's the best investments for their future because they don't go down in value. So it's a great time to be in it. The world economy is scary, Randy. There's no doubt we're going to have massive inflation, currency devaluations. You're going to see a lot of businesses go under. Banks are in big trouble. You want to go into safer assets right now. If you lose your money now, you're never going to get it back. Buy some physical gold and silver. It's a very smart thing to do, and get yourself into a couple diamonds. You'll find that over the next 8 to 10 years, you're going to do very, very well and protect yourself against bad marketplace.
Even the Pope came out this week and said global economy is close to collapse and describes youth unemployment rates as an atrocity in a damning message. He thinks that we could be near a collapse. The featured diamond of the week from rarecoloreddiamonds.com, 0.33 carat radiant cut, fancy, intense, pink argyle, a great diamond to start or build a portfolio around. And to review what we had this week in our free weekly newsletter, you can get it from Harold, rarecoloreddiamonds.com, or 1-800-432-1022. The price for meats, poultry, fish, and eggs skyrocket to all-time highs. Same with bacon and beef. You had a situation that really was quite astounding to a lot of people, and that is that Australia went into dormant bank accounts that were only dormant for 3 years, and they have taken $360 million. On top of it, the Fed is considering charging investors if they want to exit bond funds. Putin coming out and wanting to start an anti-dollar alliance. Then you add to the fact that the Argentine government could be close to a default because they won't pay $1.3 billion that's owed to hedge funds. You add in Iraq, the Ukraine. It's a recipe right now, Harold, with about 30 seconds left for hard assets.
You better believe it, Rand. And again, the last 3 years have been tough. However, the fact is that you don't lose until you sell, and if you've sold out of metals, you're just going to have to live with that when the final result comes. I'm positive that we are going to see substantially higher gold and silver prices. And again, with the currency and all the problems out there, own some diamonds. Put yourself in a position to win. And I think that the diamond market and the gold and silver market are the markets that will definitely get us there.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
To invest in precious metals, the website www.pmc.com, the telephone number 1-866-623-2002. Speak with Harold personally and privately at rarecoloreddiamonds.com, 1-800-432-1022, and take a look at his auction site, hsfineauctions.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.